Good morning, everyone, and you are mostly welcome to the start of the HBL Sales and Implementation Program. This is the instructor-led aspect of the program. For most of us here, we've started with the self-paced learning over the past weeks, and it is our results that has actually brought us to this point. We want to appreciate the commitment we've shown so far to learn about these new skills, on how we use ERP software to solve critical business challenges in Nigeria. Today, we'll be having a class on general introduction to ERP and how we make use of it in the hospitality industry. Also, we'll be having classes on accounting as it relates to the hospitality industry. Today on class with me, I have Alami Ibrahim. She'll be taking us an introductory class to ERP and how it relates to the hospitality industry, while I have Temitope Dowolawi that will be taking us accounting as it relates to the hospitality industry. This session, we are going to be taught extensively, and it is going to be a build-up to what we've learned during our self-paced classes. Subsequently, after the class, there will be opportunities to ask questions and to seek for clarification on areas that still remain gray. The whole essence of this is for us to be equipped with the requisite knowledge, for us to be able to gain these skills and go out there to implement this ERP software for our various clients at the end of the day. I need to bring to our notice also that by the end of this training, there will be a certification that will give you some form of authority to claim an implementation analyst. Also, for the sake of intellectual property that has been given into this training, we already told us we'll be signing a non-disclosure agreement just for us to ascertain that all the trainings that will be given to us during this training session is going to remain within, because this is the intellectual property of the Talent and System division of the Oyasin Group. Like we already know, the Oyasin Group is a software company that uses the knowledge of ERP to solve critical business challenges in Nigeria. So I'll be giving the floor to Lami now to take us on introductory aspect of this class. Thank you.
Thank you very much, Shagun. Thank you very much, Shagun. Hello, everyone. You're welcome to the Oyasin HBL implementation class. I'll be introducing the system to you, and my name is Lami. Please, as we go on, I would appreciate if you have any questions so we can answer them as we go on in the class. Oyasin HBL is a full-featured. Can you hear me, please?
Yes, we can. Please go ahead.
Okay, Oyasin HBL is a full-featured business management solution to help business owners keep record of their business transaction in a single system. Our mission is to help entrepreneurs establish, build, and grow more effective, efficient, and transparent businesses. The kind where business decisions can be made at any time and can help them stay on top of their competitions. Now, the Oyasin HBL focus on hospitality business. I'm talking about the hotel, lounge, bar, restaurants, club, etc. Oftentimes, questions we get to ask by our clients is usually how transparent is your system? If I am not around, how can I reach your system? How reliable is your system? To answer this, the transparency of the system actually depends on what the client actually wants. Now, I run a business and I feel there's theft actually going on in my business. Definitely, I will need the async system to help manage my accounting, my sales management and all. Now, in every business, there's risk, there's disadvantage, there's challenges. Most times, in the hospitality business, the challenges faced are usually waste, um, unorganized data, and most times as well, theft. So I'm going to be showing us the modules that will be taught in this class. I want to share my screen now. In the hospitality business, we usually have these modules in use. We have the accounting module here, the buying module, the selling module, the manufacturing module, CRM, HR, and also the store. The accounting module in this case helps us to manage our transaction, our sales transaction. Please let me know when you can hear me.
Can hear you now.
Can I go ahead?
Go on.
Okay. In the hospitality business, we have the accounting section, we have the procurement section, the HR section, and also the customer relationship section. In every business, we usually have the part I would love to focus more on. For every client you meet, for every person you meet, they usually have a preferred section they would like to focus on. Now you meet me as a customer A, and I tell you most of the things that are my challenges in my business are actually my procurement circle. Most times I have waste. I tend to throw things away. I tend to throw some spoiled item away. Definitely, I would need my procurement circle to be well managed, which most times includes my manufacturing down to my buying circle and monitoring of all of my purchases. Now, the accounting section now helps in monitoring all of my income, my profit and loss in terms of what I make into the business, how I spent these things, and many other accounting sectors that will be taught in classes. And also we have my buying section that also monitors my procurement circle, who buys what and who approves what was bought into the store and the procedures in which these things are actually brought in. Now, in buying these items to monitor the clients I gave, for instance, who is suffering from poor management and waste. Now, items can easily be monitored by tracking their shelf life. You can tell when a particular item came in and when a particular item is due to be used also. You can also monitor when that item needs to be restocked into the store. Now, also on the selling aspects, it monitors every area of your selling, from which of your waiters or sales personnel sold what, when this person sold what time this person actually sold what they sold. So this area actually shed a lot of light to the business, to your selling, to every area of your business. Depends on what your clients would want to monitor. Depend on what area your clients would like to monitor. Now, our manufacturing aspect also helps us to know how much I spent. Let me take, for instance, jollof rice. My manufacturing area helped me to know how much I spent in producing jollof rice, how much the jollof rice is actually worth, and how much I am going to be selling this jollof rice, to know what profit I'm getting from this jollof rice, so I don't end up selling in loss. This actually is very important for a business that actually experience lots of loss in terms of production. This way they know how much they are selling what, how much they're gaining from what, and how much they are expected to be selling what they are selling. And also we have the CRM that helps us to monitor helps us to monitor our customers, how often our customers come in. This also helps us to know what our customers order more. This way, you know what your customers actually come in to get more, so you don't restock on things that are actually not necessary. You actually restock on things that are well demanded for. That way, you stay ahead of competitions and you sell more. We also have the HR aspect of the business. The OYASync HBL also helps to manage our staffs. This way, you are able to manage your staff circle, how efficient your staff are, and what they are expected to do. All of these modules will be taught in the class, and to the best of our understanding, we can ask as many questions as we want to, and also relate more so we can understand these areas of the OYASync HBL. So I don't know if you have a question on what you would like to know more on the system. Hello?
Nothing for now, nothing for now.
You're okay for now.
It's fine for now.
Okay. It's time for our accounting class. So I'm going to stop sharing my screen now to allow the accounting.
Thank you, Lami. Right now, we'll be having Dr. to take us on accounting session on the accounting module of the OYASync ERP. Thank you.
We can all see my screen. Good morning, good afternoon, everybody. I hope we can all see my screen.
Good afternoon. Yes, we can.
Okay. My name is Tola Tokbe, and I'll be facilitating the accounting module on the use of the OYASync ERP. So this session is going to be as interactive as possible, and I might occasionally pause to allow for questions, and I might also occasionally pause to ask questions. So I'll be sharing the outline for today's session, and as you can see, we'll be covering 6 major areas. The first area is going to be the introductory parts, where we'll look at introduction to the accounting model. Then we'll look at basic uses of the ERP for accounting purposes. Then we'll look at the basic setup, where we'll look at the chart of accounts, we'll look at opening balance in accounts, we'll look at cost center. Then we'll also look at billing. Under the billing, we'll look at how to prepare a sales invoice and a purchase invoice. And we'll also look at and interpret some basic reports. Then we'll go on to the journals and payments. We'll look at what a journal entry entails. We'll look at the mode of payment, and we'll also look at payment entry. Then we'll look at tax and budget. We'll look at tax templates, setup. We'll look at budget setup. We'll look at reports. Then last but not least, we'll look at the accounting reports. We'll look at accounts payables, accounts receivables, P&L, balance sheets, and other reports. So I'll try as much as possible to cover all the areas we've mentioned today, but If we are unable to cover it today, we'll continue it in the subsequent class tomorrow. Okay, so I'll be taking us into the OyarSync ERP, and I'll also be using the slide to guide the progress of this workshop seminar. So introduction to the accounting module. So basically, we can see that when we look at the accounting module, there are two things that we consider. We consider tools and we consider reports. I would explain them each in person. So let me take you into the OyarSync ERP. So this is the general face of the OyarSync interface, and it is very, very much customizable. And this is the accounting module. So when you look at the accounting module on the OyarSync ERP, some basic things that you might need to consider is the fact that on the OyarSync ERP, you have tools and you have reports. Now, when I say you have tools and you have reports, what I mean is that on the accounting module, there are some options that function as tools. What this does is it enables you to be able to input information into the system. It enables you to be able to input information into the system. It enables you to be able to manipulate the system for accounting purposes. Then when we look at reports, what a report typically does is it gives you information based on the data that has been imputed into the system. So what I'm saying is you have tools and you have reports. So hold on, I'm just refreshing the system. So you have tools and you have reports. So we'll be looking at the tools and we're looking at the reports that we have on the system. We might not go into details about that now, but as the session progresses, we'll look at the different tools that we have on the ERP system. Now, one of the very first tools that we have on the ERP is the chart of accounts. We can see the chart of accounts. What does it do? The chart of accounts is like, okay, I'll discuss that in subsequent days. There's actually a class for that. We have the chart of accounts. We have the sales invoice. We have the purchase invoice. There are tools. The chart of accounts enables us to set up our ledgers, all our relevant ledgers that we need to set up our accounting. We'll look at as the session progresses. We have our sales invoice. What does our sales invoice do? It enables us to be able to make sales on the system. We have our purchase invoice. We have our journal entry. We have our payment entry. All these are tools. What that means is we use these options to be able to enter information into the system. Then we also have reports. We have numerous reports. In short, we have more reports than I think we have tools. We have the accounts receivables report. We have trial balance. We have general ledger, and we have other numerous reports. We have accounts payables reports. We have financial reports. We have sales reports. So we have so many reports. So what that does is it enables you to extract information from the system to make decision. Okay. So okay. So the next aspect that we're looking at or we're covering is we'll be looking at the basic uses of the ERP for accounting. So the broad and the most routine or the easiest things that come to mind when it comes to the use of any ERP for accounting is the fact that it should be able to perform some basic functions. The first one is bills management. Now, when I use the word bills, I'm not talking only about expenses like NEPA bill and the like. When I talk about bills, bills includes every single thing that every single financial transaction that has to do with the exchange of money. So you have sales invoice, is a bill also. You send bills to your customers. You receive bills from your vendors or your suppliers and the likes. So bills management, any ERP or any accounting software should be able to enable you manage bills effectively. So that's one of the use of the accounting ERP. It should also be able to help you perform at least the basic rudimentary tax. Now, we all know tax is very broad, and in this context, the tax that we're talking about is we're looking at sales tax, looking at purchase tax. So when we talk about sales tax, one of the first things that comes to our mind is our VAT and probably consumption tax. You get. Now, if you incur any form of purchase tax, you also need to recognize it on the system. Although here in Nigeria, we all know that our tax structure is in its formative stage, and as things progresses, the ERP or any accounting software should be able to manage the basic rudimentary tax of purchase and sales. The next thing that we're looking at is posting of accounting transaction. Now, aside management of your bills, you would have some other transactions, inflow of capital, investments, and so many other transactions, basic transactions that are not necessarily bills, complex transactions. Any ERP should be able to manage it effectively, and that is what the OyarSync ERP does also. It helps us to manage that. Not all systems can do budget management, but the ERP enables you to also manage your budget. So what that means is you can say, okay, at the beginning of a particular period, you can look, okay, let me create budgets. And we all know we have different types of budgets you get. But when we get to that, River will jump into it. Then the last but not the least is accounting reports. Now, when I say accounting report, I'm not talking about the financial statements alone. We're looking at other reports like sales reports. We're looking at purchase reports. We're looking at account receivables. We're looking at account payables. All of them are some form of accounting reports and the likes. So that takes care of the introductory part. So we'll be looking at the basic setup for the OyarSync ERP, and we'll be starting with the chart of accounts. And once we look at the chart of accounts, we'll look at the opening balance in accounts, and we'll look at the cost center. Now, before we go into the system, I would explain these three major basic setup that you need to first of all set up before you can effectively use the OyarSync ERP. Now, the chart of accounts, let me explain what the chart of account. This can be described as a tool that helps in the setup and management of all relevant ledgers that are used for accounting purposes. Now, I would explain that before I talk about what I mean by asset, liabilities, equity, income, and expenses. Now, every business has different accounting ledgers. In short, accounting is anchored basically on the management of ledger. You cannot post or complete an accounting transaction without posting from one ledger and having a corresponding posting on another ledger. So accounting is basically debit and credit. And when I mean debit and credit, it means you are debiting one ledger and you are crediting one ledger. Now, you will be creating ledgers as your business grows. So what that means is, as your operation expands and you need to capture some other new aspect of the business that when you started was not in existence, you need to create ledger. So what is a ledger? A ledger is basically you have a sales ledger, you have a purchase ledger, you have a bank account ledger, you have so many ledgers, but these ledgers are broken down. You have a control account ledger that has smaller ledgers and the likes. So a ledger basically is what enables you to be able to capture a financial transaction. Now, the OyarSync breaks down all the ledgers, or it groups all the ledgers into 5 major broad heads. You have the assets, you have the liability, you have the equity, you have the income, and you have the expense. Now I'll explain them one after the other. Now, when we look at assets, you have majorly on the system, you have different categorization for assets. You have non-current or fixed assets. You have current assets. You have so many categorizations of assets you get on the system. Then you also have liabilities. You have different categorizations for liabilities. You have non-current, you have current. You have equity. You have different elements of equity. You have capital. You have it. So when we go into the system, we'll see everything. You have income, you have expenses. Now, what this does is, as you create your ledger under these heads. So it might, each of these heads would have children that might have children that act as parents that have other children. So you create your ledgers. All your ledgers will fall in some form under one of these 5 major heads. Now, chart of accounts is a topic on its own that we're going to look at immediately after we leave this PowerPoint presentation. Then the next aspect we'll be looking at is our opening balance in account. And what does that mean? Now, this is the movement of the closing balance of accounting records from a legacy software into the OyarSync ERP. Now, by legacy software, what I mean is either a software that you've been using before or a manual documentation. You might have had a manual system where you've been recording your transactions. You might have a manual place where you've been recording your transaction, or you might have a software that you've been using to run your accounting. Now, what that means is you are moving that system and you're moving it into the ERP. Now, when you are moving it into the ERP, it comes in as opening balance of accounts. Now, what that means is the closing balance of all your ledgers in your balance sheet is what is going to be reflected in the ERP. So we'll be looking at how to do that. So typically, when you use the ERP, is either you're using it for a new business or you're using it for an existing business. Now, if you're using it for a new business, what you can do is to capture all the transactions as the business comes into existence. But if it's an existing business, you will need to transfer some information from your legacy software, which can be software or manual documentation of any form, into the ERP for you to be able to have a continuation of running of your business or running of your operation. Now, the last but not least aspect on your basic software that we're looking at is our cost center. And what is a cost center? So for the purpose of this session, for this training, this is the management of an identifiable business segment for accounting purpose. But in simple terms, what a cost center is a cost center can be anything. It can be a department, it can be an individual, it can be a segment, but basically it's anything that accrues costs. That cost can be accrued to, can be posted to. That is what the cost center. But in order for you to use a cost center effectively on the OyarSync ERP, it's good when you use it to manage identifiable business segments. Now, I explain what I mean by business segments. It's very simple. A business segment is you have a business. Every company comes into existence to fulfill a particular purpose, and that purpose is business. So if you have a restaurant business is to cater for people, sell food. You understand? Now, within that business, you might have identifiable sub-business segments. So it is still within the business, but within that business, you have some identifiable segments. Now, the word use of identifiable segments can be very relative and is open to interpretation. But I'll just give you a very simple I'll give you a simple analogy. You can have an hospitality center, let's just say a hotel. Now, what the hotel does, it renders laundry service, it has a bar, it has a restaurant, and it also has the room service. You get the hotel itself. Someone can say, oh, that business has 4 identifiable business segments and they want to manage them in isolation. So what that means is I want to see sales, I want to see expenses, everything that has to do with the bar in the hotel. I want to see everything that has to do with sales, expenses, and other running costs as regards the restaurant, as regards maybe the laundry, and as regards the room. So if it falls under or it meets the criteria of something that is actually identifiable. Now, something is missing here. Identifiable is one thing. It should also be distinguishable. You understand? You should be able to distinguish it from other business segments, and if need be, you should be able to do what? Apportion, allocate and apportion. You get. So those are the certain things that you need to put at the back of your mind when you want to venture into the cost center. Okay, so without any further ado, we'll be going into the ERP and we'll be taking chart of accounts first. Okay. So we'll be looking at the accounting module as we said, and we have shortcuts on the accounting module. On the shortcuts, you can see your chart of accounts here. You can easily access it, or you can scroll down to access the chart of accounts, or you can simply just come here and type chart of account on your search bar. So your search bar is a very, very useful tool to easily navigate your way within and around of the ERP. So we'll be looking at the chart of accounts. Now, opening the chart of accounts, we can see the 5 major categories that I mentioned earlier. We can see our assets, we can see our liability, we can see our equity, we can see our income, we can see our expenses. Now, once you open your assets or your application of form, which is like a parent, you can see smaller children under them. Now, you can see this looks like a folder, and this also looks like folders, but these folders are within this folder. So this is the parent folder, and this is like the child. Now, you notice when I click on this, you can see some other options populating at the side. You can see edit, you can see delete, you can see add, and you can see view ledger. Now, if you want to add a child, what that means is that you will be adding another child under this parent company. Oh, sorry, this parent folder. Now we can see we have other smaller folders. You can see we have current assets. If I click on current assets, you see it shows it has its own children. It has bank accounts, it has cash in hand, it has accounts receivables. If I open accounts receivables, I can see a debtor. Now note, there's a very significant difference here. We have a folder and we have something that comes out like a bullet, a circle. Now, this outrightly, when you see this, is a child. And you can have a parent that has a child, and that child can have his own child. But when the child comes in as a bullet like this, that child can never have another child. It's a child, it's a baby. It can never have a child. And once you create it that way, you cannot create it that way and upgrade it later. No, it's not possible. Once you've created it like this, it is a child and it's a child forever. So if you click on this, you notice that the option to add a child will not be shown. But if you click on this, the option to add a child will show. So basically, when you want to manage your account, you need to create all relevant ledgers in your chart of accounts. Now, I know the example I'll use is an example that I know all of us can relate to very, very well. And I'll be using our bank accounts. Now, if I open our bank accounts, we can see we have Access Bank and we have GT Bank. You get. Now, for example, if I want to run my business, and yes, fine, I have Access Bank and I have GT Bank, but I have other bank accounts. I have UBA. If I don't create UBA as a ledger here, there's no how I can use it for my accounting purpose. And that is what I mean by ledgers. I don't know if you understand. So I'm just using a bank account as an example. There are other examples. You might have expenses. You might have a form of expense that you want to capture and you need to create a ledger for. You might be incurring an asset that there's no ledger for it on the system, or a liability, or let's say you are involved in some complex financial transaction. Maybe you are making some investments, or maybe you receive a grant or something like that, that you might need to create a ledger on the system. So what you need to first of all do is to identify where that ledger falls under. Now, when you identify it, then you create it in the appropriate place. Now, for example, I want to create an extra bank account. I have identified that my bank account is an asset. Now, it's not just an asset, it is a current asset. Now, it is a current asset, but it falls under bank account. So I'll first open this, I'll open this, then I'll open this. Then when I open this, then I do what? I'll click on add child. Normally, when you click on add child, this cell will populate. Now, once this cell populates, you give it the name you want to give it, UBA. Now, the account number, businesses, or if you are running your business, depending, they give code for there are some softwares or there are some accounting policies whereby an account is going to have its normal name, but it also has some form of code if they want to post. Let's say they are using a legacy software, you get. If you have the code name, you put it here. But also, for the sake of bank, you can also just put the account number. So what I'm saying is, the account number here for bank, it's very relatable that, okay, let me put the account number. But you might have an expense, and that expense might still have some form of account number, you get. So it is everybody has different ways they manage their system. It is not compulsory to have an account number, but I can just put an account number for the sake of, okay, this is a UBA bank, you get. It is not compulsory, and I'll just put in a fictitious bank account number. Now we have this option is group. Now, when you check this is group, it means that this child I'm creating is a child, quite all right, but it can be a parent. So what that means is that it will come out as a folder. It will come out as a folder. But I want you guys to know that if it comes out as a folder, you cannot use it for any accounting transaction. You can only use the ledgers that come out, that appear as bullet for accounting purpose. You cannot post into a folder. A folder is more of like, it serves as it's like a directory. It makes your chart of account neat. It makes it organized, and it acts like, let's say, like some form of control account where, okay, if I want to see everything under it, you get. So if you click on this it means that you want it to come out as a folder, and you already have in mind that you are going to create a child again under it, that you can, a child that is not going to have that cannot have another child, that you can now post directly to. So because I want to use UBA, I would not check this button. Now it will ask me the accounting type. Now I know the accounting type is a bank. Then it will ask me the currency. Now, one of the good things about ERP is it allows for multi-currency. And in subsequent sessions, we'll look at multi-currency. But to select the Naira option, the Naira option is NGN. So you select NGN. So once you've done all of that, the next thing you do is to create. So once you do that, you can see that I have my UBA created. You can see my UBA account. Now, if I click on my UBA account, I can still do what? I can still edit it. If I come and I want to edit it, I can come and say, okay, I want to change, I want to edit the name, and I can say, okay, fine, let me remove this. And I click on update. You can see it has changed. You see? I can go back and I can look at it. If I click on it again, I can view ledger, and I can what? I can also do what? I can also delete the ledger. You get. So when you want to view ledger means, in accounting terms, I want to look at the transactions that have been posted into that ledger. That is what view ledger is used for. Now, you cannot delete an account that is already in use, because the system is going to see it as fraud. It's almost like saying you people have somewhere you used to keep your bank account, like you used to register. Let's say you have your bank account, let's say, where you used to put records for your UBA transactions. You've been putting it there. All of a sudden, you just want to take that folder and you want to dismantle it. It means you want to perform some form of fraud, or you want to hide some certain type of information. No, it's not going to allow you to delete it. But if you open the folder and you've not used it at all, you opened it erroneously. If you come and you click at this, you click this delete button. Okay. Because of we renamed, okay, now we can delete it. So you will see that the UBA I just created has vanished. The reason why it vanished was because of we've not started using that folder. So this is just a part of chart of account. So we've looked at how to add ledgers on the chart of account, and we've looked at how to edit it. We've looked at how to delete it where necessary. Now we'll be looking at how to view the ledger. Now, when you see, for example, I can see stock in hand here. When you look at a particular ledger and you can see that there's information in front of it, you can view the ledger. If you click on view the ledger, it opens the ledger for you. Now, once it opens the ledger for you, you can see that someone posted an accounting transaction. Someone just opened a transaction, you get. And this was the transaction that was posted into this ledger, into this stock in hand ledger. And I can do my further investigation and open the particular transactions to view what and what transpired, you get. Although we'll be looking at all these aspects, we'll be looking at it in greater depth as the training progresses. So that is the last aspect of the chart of account that we're looking at. You can edit, you can delete, you can view. Now I'll just reiterate and just talk about some certain parts of the chart of account before we move on to the next agenda of the day. So we can see this is the asset, the liability, the equity, the income, and the expense. So I'll just quickly peruse through everything. So you can see your current assets, you can see your fixed assets, you can see your investment, you can see your temporary accounts. Hold on 1 minute. Breaking transmission. Okay, so we have the current assets, we have the fixed assets, we have the investment, and we have the temporary account. Now, the way the ERP is structured, we use the temporary account like a form of suspense. So basically, you use your temporary account like a suspense account, but When it is used the most is when you are using the ERP for the very first time and you are moving records from a legacy software into the ERP software. Then also, we have fixed asset. Under the fixed asset, we all know what the fixed asset is. We have different broadhead buildings and the likes. The system also has an asset module, and I'm guessing that will be taught in other subsequent classes. You have your current assets. You have so many numerous things under it. You have your cash in hand, loan, you have debtors and receivables. Also for liabilities, normally you have your current and non-current liability. Under your current liabilities, you have accounts payables, you have duties and taxes where your tax would appear. You can see under accounts payables, you have creditors, you have payroll payable, and you have so many other heads that enables you to create your ledger the way you're meant to create it. Now you can also create non-current liabilities and populate it as the need arises. You also have equity. Under equity, you can see you have capital stocks, you have dividend paid, you have opening balance equity, you have retained earnings. So as you trade and as you make profits, this particular ledger is populated. You can see your capital stock as you are probably maybe selling part of your business, you get, or issuing out shares to shareholders and the like. You use your capital stock. You also have your opening equity. And for income, we have the direct income, we have the indirect income. So basically your direct income, so I'll explain the way direct and indirect income works very briefly. So under your direct income, you have sales and you have services. Now, direct income is basically income that comes as, let me just use the word, the income is very direct, you get. But let me explain it. Every business has a purpose to fulfill. Once you fulfill that purpose, the income that comes into the business is income that you get from running or from trading, you understand, which is a direct income. As you trade and as you meet and fulfill the purpose of the existence of that frame, the income that comes in is from your trading operation is direct. Now, indirect in the sense that it's not necessarily the purpose of the business, you get. So let me put it this way. So we have a restaurant, and that restaurant, as the restaurant grows and grows and grows and grows, we got a van, and we're using the van to sell. We're using it to do delivery and the likes. Now, somebody else approaches me, maybe another restaurant, a friend, and is like, please, I don't have a van. Can I rent your van? And I'll give you so and so amount. That income is indirect, you get. Or you invested in some other business, and that business is now yielding rewards to you. That income is what is indirect. So it's something that it's coming in but not directly into the business. It's not because of the business is running operation. If it is the main sale of the business, fine, it's sales. So that's just basically the difference between the direct and indirect income. And you can always do how you want to rest. You can always add child and capture that. Then for your expenses, you have direct and you have indirect expense. So direct expense, basically, if you open this, you can see stock expenses. And when you see stock expenses, you already know that, yes, these are trading expenses, you get. Now you have your cost of sale, you have stock adjustment, you have everything. Now, the system automatically is automated, and most of all these things, you would most likely not even open or go to it, because the system is just going to automate everything and it's going to run everything smoothly. But I'll just explain what the direct and indirect income. So as I said, direct expenses. So the direct expense, most times they are trading expenses, and I'll explain what I mean by trading expenses. So trading expenses, or when I use the word trade means when you exchange goods and services, or goods or services. So when I sell something to somebody, the costs that are incurred as a result of selling that thing, that is a direct expense. It might be tricky, but I'm very sure some people that have some form of accounting background will understand. Does someone have a question? Hello. Okay. So usually when you trade, someone's mic is on and the person is, I'm guessing, who's that person? Okay, person has muted. Okay. So as I was saying, as you trade, the value. Sorry, please, can you mute your mic? If you are going to ask a question, please signify and I will allow you to answer your question. Someone's mic is unmuted and the person is interfering with the session. So sorry, apologies. Okay, so as I was saying, the value of the good rendered and the value of the service rendered, the cost element of those values is your trading expense. So, and most times it's direct. It's nothing as direct as that. So what that means is if I sell a laptop worth 1,000, sorry, if I sell a laptop worth 200,000 and I bought that laptop 150,000, the direct expense of that laptop, which is the cost of goods sold, is 150,000 naira. So that's what I'm just trying to say, expressly saying. The same applies to services. Then for indirect expenses usually they are operating expenses. They are operating expenses. So indirect expenses are operating expenses. What that means is the expenses that you incur as a result of running your business are operating expenses. So usually you have two broad categories of expenses. You have administrative expenses, then you have selling or distribution expenses. Most people call it distribution expenses. So those are the broadest two categories of expenses. And what do they mean? They mean costs that you incur as a result of doing what you need to run your business. So that has to do with, okay, you need to pay for NEPA bill, you need to pay for water bill, you need to pay salaries, you need to pay for consulting and the likes. You have some selling expenses also, or distribution expenses. You get costs that you need to incur to do what, to be able to trade. All those ones are indirect expenses. So with that, we've covered the chart of accounts. So before we move to the opening accounts, I'll be pausing to allow people ask questions. So the floor is open, and let's use this opportunity to ask questions. I don't want to move too far ahead and leave some certain people behind. So if you have questions, please, this is the opportunity. You have the opportunity to ask.
Hello?
I'm with you.
Can you?
Yes.
Oh, okay. Yeah, good afternoon, everyone. So my question goes like this. So in terms of shifting, like that's a company from their legacy way of doing it to Oya Sync.
Yes.
So like how for the how far do you have to go in terms of accounting year? Do you have to go to like to back to when the company was established, or for that particular accounting year. That's the only transaction, the transaction for that particular accounting year that you're going to move. So that's what I don't really understand. Like, how far back are you going to go?
Okay. Okay. Thank you very much, Eric. Okay. I'll explain that, and it's pretty very simple. You get. So I would recommend that, you know, I put it there. If you look at the slide, let me go back to the slide. Which other slide am I? So if you look at the slide, you see this is the movement of the closing balances of accounting record from a legacy software into the ERP. So what that means is that the dates or the time that you are disregarding your previous system, the closing balance of your ledger accounts or your ledger balances in your balance sheet is what you would move into the ERP. You get, that is the recommended that's the recommended way. That is the recommended way. So it means the closing balance as at the time you want to use the ERP, you close your legacy account, you close it, you take the balance sheet and you reflect it on the ERP. That is how far back you are meant to go. So let me explain it. That's the recommended way. So what that means is, if I approach a client today and the client is like, okay, fine, I want to use your software, you get, today. And I say, okay, fine, we'll start using the software tomorrow. If he says, okay, fine, what I'll just do is, at the end of today, I'll close the system it's using completely, and I'll take the closing balances in his balance sheet, and tomorrow I'll put it on the ERP, and they continue from where they stopped. You get, they continue from where they stopped. That is the recommended way. But if you want to go back as far back, then it is open to whatever interpretation you want to open it to. You get, so it's not relative, it's not recommended. I'll recommend it. So if you want to now start capturing, let's say the person, yes, I want to use the ERP, but the person has a legacy software that is as far back as 20, you get 20 years. You can now say, okay, oh, fine, oh, I want to capture it as far back as. That is a lot of work, and that is a lot of headache. You get, I would not advise it, and I will not recommend it. You get, but if the person's bookkeeping or accounting process is very clean and very neat, then fine. It means that everything has been well documented, although it's going to slow your deliverable period down because you don't know the vol. Although yes, you can export everything into the system, you get, that's fine, but extracting that information from your legacy software, so if it is manual, then it is a serious problem. But if it is some form of software, maybe Excel or the likes, if the software enables you to be able to arrange it, you can move information as far back as possible. You start with the earliest time when the person used the system. Then what that means is, on the system, you now start closing it up to the present date. But as I said, I would not recommend that. You get, the recommended process, as I said, and as you can see in the slide, is the closing balance on your balance sheet. So that means the date you want to start using the ERP. Let's say we want to use it today. We'll close our legacy software or our legacy system yesterday, the day before today. We'll close it, and it is that opening balance that would reflect on our ERP. So I don't know if that answers your question, Eric.
Yeah, thank you very much.
Yeah, you're welcome. So any other questions? Is anybody raising his or her hand? Okay, so note that, as I said, I would proceed, but I might come back and I'll ask some certain people questions. I might just ask you, okay, since we discussed this, Alpha, can you just guide us through? Because the reason why we're starting with the chart of account is because it's the bedrock, and we'll be building on it. So if your foundation is not strong enough, you might have issues. Okay. So we're moving on to the opening balance in account. Now, the question Mr. Herrick asked is very, very relevant, and it's very, very relevant to the points that we've just gotten to in this training session. So the point is, we have somebody that was using a software before, and that person says, okay, fine, I want to use the ERP system, ERP. Okay, what do I do? Now, the tool that enables you for accounting purpose, the tool that enables you to be able to capture opening balances, although we have numerous tools, is a journal entry. Now I'll click on add journal entry. Now we're still going to cover journal entry in greater details today, but for the sake of capturing the opening balances, I need to open up the journal entry. Now, as I said earlier, you will use the closing balance of the balance sheet of your legacy software. So the closing balance is what's going to be the opening balance on our journal entry. So on our accounting type, entry type, we'll scroll down and we'll select opening entry. Once we select opening entry, you notice that we had a population down here. You get, if you scroll down, you can see that we have ledgers that have been populated. You can see everything that has been populated. Now, this is populated based on the chart of accounts that is in existence. You get, so this is basically almost all. This is basically all the ledger accounts that we can make postings to that have just been populated. Now, the dates. This is one of the most very important aspects. The dates. That is the date that they want to start using the ERP. That is the date that you need to put here. You need to put that date here. So now let's assume that this person wanted to start using the ERP as at the 1st of March. We'll select the 1st of March. Now, once we select the 1st of March, the next thing that we'll now start doing is we start imputing the closing balances. Now, the person can say, okay, how much did the person have in his or her Access Bank account at that particular date? Let's assume the person had 150,000 naira. So you put your, now this requires a little bit of knowing. When you close your account, definitely your balance sheet, you already know where you are going to put whatever balance that you're putting, whatever balance to. You have accumulated depreciation. We all know that accumulated depreciation is going to also always be on the credit side. Now you need to have created your assets in advance. So that's not going to be touched in this particular session. The assets module will teach you how to create assets. Then we'll be able to deal with this one very well. Overdraft, buildings. Now you can have buildings also, but I said you would have created your asset also. So cash also, we can say, okay, how much did we have in our cash account? Now you notice it's balance sheet ledgers that I am making posting to. I'm not going to be putting anything like sales. If you should understand why I'm not putting things like sales, because all those things will reflect in my what? In my retained earnings, which would have covered all this. Okay, so for my cash, I can put 100,000. Now scroll down. Now, this is the very tricky part, and it is my creditors. Now, we all know what the creditor is. It means people that who I am owing money. You get, and your creditors are usually what? Your suppliers, your vendors, people that supply you things and you've not paid them. So peradventure, I'm owing people money. Once I click on my supplier, it brings out all the names of my suppliers. And I can now say, oh, Digital Fortress, fine. You get. Now we all know that creditors should what? Be on the credit. So let's say we're owing this person 60,000 naira. You have it there. The same thing with debtors. We all know what debtors. Debtors are people that owe us money, and usually they are what? Our customers. So I'll select customers, and what that does is when I click here, it brings out all the names of our. So the thing is, if you know the name of the customer, you can just type it. You get it, filters it, and it brings it up. I select, and we know it's going to be debit, so I can put 40,000. Now, mind you, you can have multiple creditors, multiple debtors. So if you want to add more, what you can just do is you can come here and just say insert above. It brings the option of adding another creditor. Then I select my party. I can continue everything I'm doing here. Once I select my party, it will ask me which party. It might be a different person. So I clear this, and let's say, let's say it's Debbie Ventures, and since it's a creditor, it's going to show a credit balance. You can try to do it here. You click out. When you click out, you can see Debbie Ventures here. You can see Debbie Ventures here. Now, what the system tends to do is this. The system tends to always balance off itself. You get, so you can see I didn't enter 230,000, but 230,000 is the difference that would balance my debit with my credit. You understand? So that is why it kept it there. So let's just assume Debbie Ventures is owing Debbie Ventures 20,000 naira. So we'll put it there. So you can do the same with debtors also. So what that means is you can always add rows. When you add rows, what you just need to do is just to create a second creditor, select supplier, and select the name of the supplier, and you put the amount that the supplier you are owing the supplier. The same applies to debtors. So you scroll down, GT Bank. So GT Bank, how much you have in your GT Bank account? Let's say you have another 100,000. Now, the fundamental principle of a balance sheet is what? Sorry, of a trial balance is that, of a journal entry is that it must always be balanced. Now, you have many more accounts here. You have your VAT, it's going to be credit. Now, when it's showing a credit, we all know that, yes, it means that we have not remitted that amount to what? The government. You get, so you have different, so you just put all the balances that you have in your balance sheet, you put it here, and you save it and submit it. Now, this is what I'm saying. You can see that the difference between, on your debit side now, you have 390. On your credit side, you have just 80,000. So you cannot close this document until when it is what? Both sides are balanced. Now, if you are using your balance sheet, you have all your balance sheet information here. Normally, your balance sheet would have been balanced, and whatever information you put here, the journal entry will be submitted. So what that means is that there's a credit entry that we need to enter. Typically, you would either have some form of retained earnings, or you would have it as equity. You understand? So It's basically from what you have in your balance sheet. So in this case, I'll just put, for me to know my difference, let me just look at what's left. What is left is 310. So I'll just assume that the remaining 310 is coming from capital. Okay, so it's still not balanced. Okay, it's balanced. Now, because of it's an opening entry, please, before I forget, you must always come down to more information here. I need to ask you, is it opening what? Is it opening entry? You must always ensure that this is selected as yes, that it is opening entry. So I'll save this. Okay. So it has not accepted. Let me start it again. So this is 150. $100. Let me refresh this page. So I can refresh by reloading. I'm guessing my internet is quite slow. Let me refresh it from here. So mind you, someone accidentally used this particular company that I meant to use to run a particular transaction. So when we are looking at the effect of what we've done, I want you to disregard a certain amount of money that showed in our stock in hand. And that was what we saw when we viewed our ledger for stock in hand. So as I said, we change this to what? Opening entry. Then we'll select this as 1st of March. So here we can have 100,000. Okay. For cash, you can have 150,000. So our debtors, customers, let's just select ABC Hotel. So it's going to show debit also. Let's put it as 50,000. Then creditors also. Suppliers. Put in our digital fortress. Let's assume this is 200,000. So which other accounts did we? So we looked at GT also. So for GT, let's leave it as 50. And we scroll down and I can see the difference is 150. Then we can put the remaining as opening equity 150. So because of we selected this opening, normally, if we come here, we click on more information, we'll see that it's already selected. So we'll save this document. Okay. So we have to delete all these empty cells. That is what it's saying. So one thing is you can mark the ones that you can mark everything and just uncheck the ones that have figures on it. But I'll be showing you a shorter and faster way of, sorry, I've not deleted this. So I'm guessing what is left, everything has values. So yes, value. This one doesn't have a value, so I'll delete this. This one doesn't have a value. So I can save this now. So once I save this document, note your debit and your credit side must be balanced. Once I save this, I'll submit this. And your opening entry has been what? Has been submitted. Now, we can view this transaction, that what has also happened. We can always view the ledgers to see what is happening or how this posting has been reflected. Now you can see this is an opening entry, but for us to understand the implication of what we've done very well, I can take you back to the chart of accounts, and I can also take you to the balance sheet. You get. Let me first of all take you to the chart of accounts. So if we open the chart of accounts, if we look at the bank balances, you see that you see that Access Bank, GT Bank, and even cash, they have figures now. They've been populated. And now if we view these ledgers, we'll see that under opening, that there's a transaction. Now, if you want to see the ledger for opening, you can always click on this. It will show you the exact posting for the opening entry. Otherwise, you can just still leave that as on. So what this does is that when we want to use the system, all the information that we've taken for our balance sheet is now reflected on the system. Now, I would like to seek you guys indulgence and apologize. Somebody was using this system as we were having this session, and when I would open my balance sheet, you might see some figures that we did not input, which is this 11 million, and that is coming from. You notice that when we're doing the when we're viewing the ledgers, you notice that I opened stock in hand, right? So you see that stock in hand would have that figure. Now we didn't do this, you get. So I need to apologize to everybody. We didn't do that, but every other transaction that we see here are things that we imputed. So you can see that we imputed creditors, we imputed cash, we imputed GT Bank, we imputed Access Bank, we imputed debtors. Everything is showing. So that is the opening entry. But we have numerous ways of capturing opening entry. Now, the thing is, you might want to capture your opening entry in piecemeal, and you might want to use other tools also in capturing your opening entry. Now, you notice when I tried to submit the document, it was, how will I put it? It was, I had to start deleting some certain cells, deleting some certain cells, deleting some certain cells. Now, peradventure, I didn't want to delete those cells. I just want to just lift my closing balance. I want to lift it in piecemeal. I want to lift it small. You can do that. So what you just do is, you don't need to have the balance sheet. So if the person doesn't give you, or the person has not prepared the balance sheet, okay, the information he has as it's giving you, you can be imputing it on the system. You select the opening entry date, which is 1st of March. Then you come here and you now select the ledger that you have information for. So you can put it as Access Bank. Let's say we have information for Access Bank, and let's just assume, let's disregard the first opening entry, 60,000. Let's say we have information for a debtor. Let's just assume, select debtor, customer, then we select our customer. Let's assume our customer is Abdul. We delete this, and let's say our debtor is owing us 100,000. Now let's assume it's just this information we have. You get, as other information comes, we'll be imputing it into. So this is, we're moving from a legacy software to the ERP, and they've not given you the full information. Now, pending the time, we will use our suspense account, and our suspense account in this scenario is what? Temporary opening. So you select your temporary opening account. Then, as I mentioned earlier, you scroll to the bottom, you come to more information, and you change this to what? Yes, it is an opening balance. You change this to what? Yes, it is an opening balance. Then you do what? You save this document and you submit this document. Now I'll just explain briefly. The implication. Now, what that means is, as you post into temporary opening, as you get those information, you would either be debiting or you'll be crediting temporary opening account. When all that information is complete, temporary opening is going to automatically do what? It's going to actually write itself off. It's going to automatically write itself off. So that is how you enter information into the system in piecemeal for opening entry. Now we can view what we've just done. We can look at it in our chart of accounts. Now, I forgot to mention, you can also use your general ledger to view this. You get. So I think I use Access Bank. I can view the folder. Now, when I view the folder and I click on Show Opening Entry, you can see it's showing 2 entries now. This was the first one I did, and this is the second one I did. So that is one way of using the opening entry account. For now, okay, let's do one more form of opening account. So for our debtors and for our creditors, we can also put in opening accounts using our sales invoice and using our purchase invoice. Now, what this means is, there are some people that are very, very particular about their invoices. You understand? They want to always track their invoices. Now you can input all these things in bulk. In subsequent classes, you guys will be taught on how to import and export them. So for my supplier, let's say I have a supplier that was owing me money. Now we'll look at sales invoice in greater depth in the future. So I'll make sure that I click on this edit button. Select the date. Sorry. Select the payment due date. The most important thing is you have the customer's name. Let's assume it's this hotel person also. Scroll down. Now, as we will see as this session progresses, as we will see as this process or session process, we will understand the use of the sales invoice better. Let's just assume I rendered a service to this person. I give, okay, don't let me use this. Let me look for a much more relatable. Oh, okay, let me see. Okay, let's say I sold 5 kg cylinder to this person and this person did not pay me. You get, and that is why I want to show him as a debtor. You understand? Sorry. So you scroll down. You scroll down to accounting details. When you scroll down to accounting details, you make sure that your income account this time around will be temporary opening. Okay, so I'll select my income account as temporary opening. Then once I've done that, I'll scroll down to where you have more information, and sorry, I'll scroll down to where you have accounting details and I'll click and change this to yes, it is an opening entry. So I'll save this document. And I'll submit it. So now let's look at the accounting implications. So if we go back to this, we open chart of accounts, we go to accounts receivables, click at debtors, and view the ledger. You can see our opening entry, and we click on show opening entries. We can see all of them. So this is the first ones that these are the first ones that we use the journal entry in capturing, and this is the second one that we use our sales invoice for. So that's that. So once we do that, the implication is let's look at our sales invoice. The implication is that when this person eventually pays you your money, you can just come here and just create the payment. But that does not mean you cannot use your journal entry to also as you receive payment, you can always receive payment on the journal entry. We would cover that in subsequent classes. So the same applies to our purchase. We can also use our purchase invoice to also capture if we don't want to use the journal entry. And I told you why we have our what is it? We have our suspense account. We use our suspense accounts to also. Sorry, 1 minute. This. Okay. So we'll select our supplier. Let's say our supplier is bought. Click on this. We'll select. Select 1st of March. Scroll down. Also, you need to reflect the service that you collected from that person. Let's say the person did some marketing for you or something, and let's just put the amount as 20,000 here. So you click on edit this, scroll down to accounting, change this to temporary opening. Once you are done with that, scroll down to the bottom. You scroll down to the bottom, you go back to more information and you change this to this opening. And save this and you submit. Then we can view the ledger and we build the other. So we just go to our liabilities. Then we open accounts payables, we see our creditors, we do the ledger. So if you click on is opening, you can see the first one we did using our journal entry, and we can see the second one that we use using our purchase invoice. So that covers opening accounts on with the use of the ERP. Now I'll also be pausing at this stage to entertain questions. So please, if you did not understand anything up to now, if you don't understand anything up to now, please, this is the opportunity to ask questions. So we've looked at chart of accounts, we've looked at opening balance in accounts. So please, do you have any questions before we move on to cost center? Please ask questions. Does anybody have any question? If nobody has any question, we would continue. And as I said, I might ask people questions. Okay, so I'm assuming everybody is on the same page and we'll be moving on to cost center. Mind you, if I ask a question and you don't answer, that means you've not been following. So the last one, but not the least, is our cost center. And as I mentioned earlier, this cost center is actually pretty straightforward. The most important thing about cost center is just to understand the principle that governs cost center. Now, as I said, a cost center is an identifiable business segment. So you can use cost center in any manner.
Sorry, please.
Yes.
I have a question.
Okay.
Can you explain that temporary? What's the difference between the temporary opening entry, and the permanent one? Like, I don't really get the temporary one. Like, why are we creating the temporary entry?
Okay. Now let me explain. So I think I explained that I said earlier that a temporary opening, we use it on the ERP like a suspense account. Okay, so I'll explain the meaning of what we call a suspense account. So a suspense account is like, let's say, like a correcting account, or let's say is an account where we post to when our account is not in agreement. That means the debit and the credit side doesn't balance. So back in the days when we used to have manual documentation, because of we have documents that is manually documented, it's very possible that you might be looking for a particular transaction or you forgot to add a particular transaction. There are errors that happen that makes your trial balance not agree, and as a result, your accounts will not balance. Now, what they used to do back in the days is they would use a suspense account. They will post to that suspense account and close the account for that day, and later detect where the error occurred. Now, once they found out where the error occurred, they will correct the error and they will charge suspense account to balance the account again. You get? So I might not go into great details, but let me just explain. So it is just like you ought to have your account is not balanced because of you made a sale to a customer for, let's say, 100,000 naira, but you did not record that 100,000 naira in your books. As a result, your trial balance is not balanced and you have 100,000 naira that is missing. So what that means is that your credit side is greater than your debit side by 100,000 naira. So because of you don't want to waste all your time that day and so you close your account and you close it by charging that 100,000 naira that you did not find to where? To your suspense account. Now, when you later now discover where the error is from, you now find out that, oh, fine, is that I forgot to, the error came from, oh, it was a one-sided posting. I did not debit bank. Now you now debit bank and you now do what? You now credit your suspense account. So you correct the finance, you correct your record. Now what happens is earlier your suspense account, you debited it, but now you've credited it and it cancels itself out. Now, what you use your temporary opening is just a name, and it's basically just there's nothing like permanent. It's just temporary. Temporary opening is another name for, to me, I call it another name for suspense. So as the name implies, temporary opening means that when you are entering opening entries on the ERP, temporarily you can post into your temporary opening account until when you have all the necessary information available. So this is how it works. So the client has not given me all the information he needs to give me, but I know that as at when they want to start using the ERP, they have 1 million naira in their account, and we need to do what? Reflect that 1 million naira in the account so that they can use it. You can use the 1 million naira for other transactions. Now I enter that 1 million naira into the account. There has to be a corresponding what? Credit entry. Now the person has not given you his full books, so you don't know what that corresponding credit entry is or what it ought to be because they're not giving you the balance sheet. You do what? You will put it as what? Temporary opening, the 1 million naira. So temporary opening what is credited, and as a result of crediting your temporary opening, you've debited your bank and you have money to do what? Run whatever operation you want to run on the what? On the ERP. Now, later on, you keep on probing and probing. And person like, oh, you see that 1 million naira? It is capital that I did what? I brought into the business. You get? That is where the 1 million naira came from. You now say, oh, okay, thank you. You now go what? Into the system and you do what? You credit your capital account with 1 million naira. Then you do what? You now debit your temporary opening account because that was what you used pending the time you got the full information to enter what? The bank balance, bank entry on the system. And that way, your temporary account does what? It will balance itself out because it was credited before, now it has been debited and it cancels itself out. So that is how the temporary opening works. There is no permanent opening. So I don't know if I answered your question.
Yeah, you have definitely.
Okay. Thank you very much. But I didn't get the person that asked the question. The name. So I'm
My
noting
name
that
is Emmanuel.
Emmanuel. Okay, so that's not Eric, right? Okay. So that when I want to ask questions, people that have asked questions, I won't ask them questions again. People that have not said anything, I'll ask. Okay. So as I was saying, the cost center. Cost center, you can use cost center in any way you want to use it, but the way I recommend you use your cost center, is use it for business segmentation. And I'll explain why I feel that is the best way. So this is a fictitious company. And you can see this fictitious company has 1, 2, 3, 4 cost centers. Now I can always edit the names of the cost center as I choose to, if I want to. If I want to edit the name of the cost centers, I can always edit the names of the cost center if I want to edit the names of the cost center. But let me explain what the cost center is used for. So as I explained earlier, you might have a hotel, and that hotel has different business segments. I think I explained it earlier. And I want to do what? I want to capture each business segment separately. So 1 minute. Give me 1 minute, I'm coming. One minute, please. Okay. So if I want to add a particular business segment to my business, let's say this gas station. So we have the LPG, the gas station, we have the accessories, we have the NIT and school. You might want to have an extra part, an extra we might want to have an extra branch of the business. Let's just say is gas servicing. You can always give your cost center numbers if you want to create. So you can see I've created a new cost center. Now, what does that mean? I'll explain what it means. What it means is that anytime I want to run a transaction on the system, I just need to just select which cost center that particular transaction, which cost center that transaction should be posted to. Now, earlier we looked at the journal entries. You get the opening part of the journal entry. Let's just try and almost replicate the journal entries that we posted earlier. Let's just try and replicate it. Let's say we wanted to run a journal entry, you get, and let's say we have a debtor, and let's say we have a debtor and we want to capture this debtor. This debtor is owning the business, quite all right, but the part of the business this debtor is owing is the gas servicing debtor. Once you come to accounting dimension, you change it to what? Gas servicing. Now, what that means is that as I charge this transaction, yes, I see that, yes, I'll see that, yes, that this person is owing me. But which aspects of the business is this person, which aspect of the business is this person actually owing me? I'll just change that particular entry for this debtor. I'll change it to gas entry, and I'll do what? I'll save and I'll submit. So at the end of the day, when I'm looking at my report, for example, now, let's say it was debtor, right? Let's say I'm looking at my accounts receivables report, of which we'll cover this in greater details. You get. I can see that these are the people that are owing me money. You get. These are the people that are owing me money. You get. Now, these are different parts of the business. Main. This one doesn't even have. So we forgot to add a cost center to it. But you can see this is gas servicing. Now I can come and say, okay, how much is Abdul owing me? And I'll just type his name here. Once I type how much Abdul is owing me, it brings out Abdul's name, the main and the gas servicing. Okay, so Abdul is owing me in total 200,000. But let's just say I'm not like, oh, fine. Let's say I have so many other people owing me money. I'm like, okay, how much is even Abdul owing me from this particular part of the business? Once I come to my cost center here and I select gas servicing, you will see it bring out the only amount that Abdul is owing me for that particular cost center. So this way, I am able to do what? To look at different parts of my business and understand and have a picture of what is actually going on. You understand? So it will aid my decision making. Now I use journal entry just as an example. Every tool that you use in the accounting module is going to have accounting dimension. And under the accounting dimension, it will have the option of selecting a cost center. Once you select the the right or appropriate cost center, you are able to do what? You are able to post to that particular business segment. And whatever reports that you have, whatever reporting tool that is accessible on the accounting module, it will show you the business it will show you the total picture of whatever reports that you have for the business. It will show you every single thing. But you can now do what? You can now start filtering based on what? Cost center. And as you filter based on cost center, you will see what is happening in your business. It's a whole business, but the segment of your business, you can see what is actually happening. And you know which part of your business is performing well and which one is not performing so well. So that is just that about what? Cost center. So with that, we finish the very first aspect of the business of today's training, and we move on to the fourth slide, which has to do with billing. Now I would explain what billing is, although I explained this in the introductory class. Billing is basically all your bills that you have or you get as a result of selling, bills as a result that you get as a result of what? Purchasing things, and also bills that you get as a result of running operations. You understand? Although you can also use your journal entry in capturing or posting some expenses, but you can also use your purchase invoice in posting expenses. So this brings us to a very important and very sensitive part of today's class, which is the sales invoice and the purchase invoice. Now I explain them one after the other. Now, the sales invoice, this is a tool that enables a business to capture the process of making sales through the selling of goods and rendering of services. Now, I'll explain this. What this basically means is that you can either sell something that has substance, or you can sell a good that has substance, which is a good, it's tangible, you can feel it. Or you render a service that doesn't have a physical substance, but it has a commercial value, you understand, which is a service, you understand. So the way you capture that on the system is by doing what? Issuing a sales invoice to a customer. Now, the other part is a purchase invoice, and the purchase invoice can be described as, this is a tool. This tool enables a business to capture the process of incurring trading and operational expenses. So what that really means is, as I buy goods, the value of those goods, I'm able to do record it. Also, I can also post expenses, and those expenses, I can also post them on the system. Now, the reason why I said this is a very, very important part of the business is because more than 80%, sorry, that statistics, I didn't get it from anywhere, I'm just giving a vague representation. More than 80% of what any business is going to be doing is they will be buying and they'll be selling, or they'll be rendering services. It is a very, very important aspect of every business. So you're always doing what? You're always buying and selling. Buying and selling. So you'll be having a lot of sales invoice and you're having a lot of purchase invoices. So without any further ado, we'll go into the system. Now we also have reports. Now, relevant sales report. So we'll look at the calculation of the different sales reports. Okay. So I'm very sure that we already had, or we've tested, or we have a feel of the purchase invoice, and we have the feel of the sales invoice because of what? We used it, but we used it for a different purpose. But now we'll be using our sales and our purchase invoice for a very similar purpose, which is for doing what? For buying and for selling. Now I'll be starting with my purchase invoice, and I want to explain something when I'm starting my purchase invoice. You will be taking through inventory management, and you'll be taking through other modules, but I will clearly explain what a purchase invoice, what it does, and what a purchase invoice, what it can also do. Okay, so basically, when you buy a good from a vendor or a supplier, that vendor or supplier would send you an invoice. So you should always look at it from this point of view. When he gives you a sales invoice, that sales invoice he gives you is your own purchase invoice. When you give somebody a sales invoice, that sales invoice given to the person is always opposite, is a purchase invoice. You understand? Now, the ERP also enables you to use purchase invoice to capture expenses. We'll look at that one later. But the first thing we're going to be looking at is, when we buy something from a supplier, how do we capture it on the system? So let's assume that we're buying from this same person. Now, the date is very, 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 very important. Now you have the edit button to be able to do what? To change dates. The reason is because you will always capture transactions on the date those transactions actually happen. The reason is because of it will aid your accounting process, it will aid your audit process, and it will also help you to strengthen your internal control. You get, and it will make your process not be all over the place. When the date something happened, you are not capturing it the way, everything is just going to be scattered. So you have the edit button to be able to do what? To guide you to select the dates you actually make some transactions. So once you do that, as I explained earlier, you already have your accounting dimension. So if you want to capture a cost center, you put the appropriate cost center there. You scroll down. Now, scrolling down, there are some very, very important things that we need to take in mind. When you are buying things You get, for goods, they will have what? Some form of what? Physical substance. They'll have some form of what? Physical substance. Now, subsequent classes or subsequent training in other places would teach you about inventory management. And the reason why I'm saying this is I'll follow from what the first facilitator said. An ERP is a virtual representation of your business. You understand? And we all know that a business has numerous parts, functional parts, starts different departments. It has its own setup. You get. So you have your warehouse, your store, you have sales, you have account, you have everything. But every transaction a business engages itself in would always have some form of financial implication. Now, the reason why I'm saying all this is, as you use the ERP, there are some times or there are some functions whereby you might not need to click on this on this button, update stock. You notice that when I click on update stock, something populated out, and it's asking me which warehouse, accept warehouse. Now, the reason why I'm saying this is, peradventure, your storekeeper has already received whatever good he needs to receive on the system, and the accountant needs to pass an accounting transaction. You get, he continues from a purchase receipt. And once he continues from a purchase receipt, he will not need to click on this button, update stock. What update stock means is, or what it does is, it will take into consideration that this particular good has come into the warehouse, or it will take into consideration that this particular good has left the warehouse. So now let us continue. But this is the accounting aspect. So we will not touch we'll touch the update stock. So let's assume that we are buying a particular good. Let's assume the good we are buying is, let's also say it's bag. The person is into fashion. We'll create a new item. Now, this will be taught in other classes also, you get. But this maintain stock means that this particular good has a physical substance. It will be taught in other classes, but for the sake of this class, I just need to touch it. Now I'll select the right expense head. I'll just use all item group for the sake of this class. Save it. So I want to buy bag. Let's say I want to buy 20 bags. And one bag costs me how much? 5,000 naira. I'll put that there. So that means the total bags I'm buying, everything is 100,000 naira. Now, this purchase invoice is very, very, very self-explanatory. You get, as you scroll down, you see different options. We will be covering tax tomorrow. We'll be covering tax tomorrow. You can see additional discounts. If the person gave me a discount, all you need to do is just to do what? Come and you add a discount. You just put the discount amount. Let's say the person gave me 50,000 discount. The moment you put it there, so it asks you, so that's discounts received. So you need to have created on your chart of accounts discount received. So once you click on your chart of account, discount received, you can just enter it there. So I'll remove that. So you can always attach discount. You scroll down, you have write-off, you have advanced payment. Well, most of all these things will be covered in more advanced classes. So I'll just input what I am buying. So I'm buying 10 bags. Now also warehouse will be taught under the relevant topic, but for the sake of this class, okay, there's no need. Let me leave this for the class. So let me just assume that these goods came into the store. So I'll save this document. And I'll submit it. So now that I've submitted this document, you can see that it's showing overdue. What that means is that on this purchase invoice, I purchased goods from who? Bought. And what did I purchase from Bought? I purchased bags, 20 of them at 5,000 naira, and I'm owing him a total of 100,000 naira. Now, if Bought asks, okay, so now that I have this, I can always do what? Print this, use it to document it if I want to document it, but this is a purchase invoice. The purchase invoice, you might not need to send anybody anything. It is just for your own use or for your own need. You get. Now, we will cover payment and we'll also cover journal entry. And because of that, I'm not going to make payment on this particular purchase invoice. But now I have made a purchase of this particular goods, and I made a purchase from Bought. You get. So this transaction has been captured. Now, there's one thing I like to always do as I capture all these things. I always like to do what? Let's look at the financial statement. Let's look at what is happening. You can scroll down. Now, you can always check your P&L. Let's see what is happening. My P&L, there's no transaction because of what? We've bought, but we've not sold anything. The second thing, I can always look at my what? My balance sheet. Sorry. So for my balance sheet, I can see so many things that has happened on my balance sheet. You get, I can see everything that's happened on my balance sheet here. So let us continue. We'll move on to our sales invoice. Click on my sales invoice. Now, mind you, I bought bag, and definitely I'm going to do what? I'm going to sell bag too. So let's assume that I am making sales. I'm making sales to a particular customer. I'm making sales to ABC Hotel. Now, as I said earlier, this date is always very, very important. So you select the right date. But the thing is, because of selling, I always say, you don't want to be keeping all these things or rolling them over. You do it the same day that they happen. I do my sales. As I explained, they have our accounting dimension, everything is there. I already explained what our update stock does, so I can click on it. Resource warehouse, select stock. Now I'm selling what? I'm selling bag because of our what? I bought bag. I want to sell what? 10 bags. Mind you, I bought one bag 5,000 naira. Let's say I'm selling it 10,000 naira. Meaning that what? I make 5,000 naira what? Each bag. Sorry, 10,000 naira. What that means is that on each bag I sell, I make 5,000 naira. 5,000 times 10 is what? 50,000. Meaning that when we check our financial statement, I'm meant to see at least a profit of what? Of 50,000. So I'll save this. And I'll submit. So I have completed this transaction. Now, the thing is, the good thing about the sales invoice is the sales invoice is very, very self-explanatory. You understand? Now, I'll just look at some certain aspects and I'll just explain them. You can add discounts, you can, so everything is self-explanatory actually. Everything is very, very self-explanatory on the sales invoice. So one thing I want to just show you guys about the sales invoice, you can always print this particular sales invoice. If you click on this print button, it shows you how the sales invoice will appear. And you can always do what? Select whatever. So you'll be taught on how to create different invoice types. And now on the invoice, you can see what was sold. Bag, you sold 10. You sold it at 10,000 naira. And the total is what? 100,000 naira. So to go back, you click on the invoice number. And it takes you back to the sales invoice. Now, the next thing we would like to do, so this is how you make sales, just as simple as ABC, nothing complex. If we go back to the accounting, we'll look at the what? Transaction. Now, I told you that the system will be doing what? You have tools and you have what? The report. Now, note, you have a dashboard here. You can already see that you have income, you have expense, and you have sales. So already you have like a virtual understanding of some certain things that happens in your books. So if I go to my P&L, you can see we've made a profit of 50,000. Now, the reason why I know we made a profit is because I did calculation on my own already in my head, you get, but the system is going to always do what? It's going to always calculate your profit for you. It's just as simple as that. It's garbage in, it's garbage out. So we can always look at our P&L report. You can say, okay, what was the sales that we made? 100,000. What was the cost of goods sold? 50,000. What's our profit? 50,000. Just as simple as that. Now, your report is customizable. You can always click this and change it to monthly if you want to see the monthly view. But we'll also look at this extensively tomorrow. Look at this extensively so you can see. We put it on quarterly. I can put it on monthly. So if I put it on monthly, to show me everything on a monthly basis. And since we're in March, you can see that it's showing sales and cost of sales for March. So before we move on to the reports, the sales and purchase reports, we'll just be looking at just one last aspect on using the purchase invoice for capturing expenses. So very quickly, I'll just demonstrate that. And if you are going to use the purchase invoice for capturing expenses, although other sessions will explain these things in depth, I can select, let me select Caleb and Son. Let's leave the date as the normal date. You'll be taught on how to create items, and let's just say this person performed marketing for me. So I need to pay him a marketing fee of, let's say, 50,000. Now, I'm going to pay him a marketing fee of 50,000. As an accountant, you need to ensure that the marketing fee, so you can add description. So you can say marketing fee for promoting or promotion. That's an assumption. So you scroll down. You look for the expense head. By default is always going to be cost of sale, and change this to marketing. So you select marketing and you do what? You save this document. And you submit. and we'll submit. So that's how to post an expense, and I can always view the ledger. And I can see that it was posted towards marketing expense, and I can always still view the, so you can view the ledger. You can use the general ledger to view the ledger. If you want to view the ledger, you can view the ledger from chart of accounts, and you can check the financial statement also. So you can see that, let me scroll up again. You can see you've not made any profit, it's not made any loss. We had a profit of 50,000 earlier, but we paid somebody, we incurred an expense of what? 50,000, you get. So it's going to show the marketing expense of 50,000. You can see it here, showing the marketing expense of 50,000. So that's how to use the purchase invoice to capture expenses. So we'll just be looking at some of the tools that we have for reports. We're looking at the sales reports, and we're looking at the purchase reports also. So for the sales aspect, we have so many kind of reports. Let's say we have two basic reports. We have our sales register, and we have our item-wise sales register. Now let's look at our sales register. So this is where our sales register will look like. Now, depending on the volume of the transaction that you have, your sales register might be bigger than this, you get. So you see the invoice, you see the date. So you see the person that posted it. You can always do what? You can always export. You can always export this document. When we start adding tax, you'll be seeing taxes here. And you can always do what? You can always export your sales register in Excel and do what? Carry out whatever investigation you want to carry out. You also have the item-wise sales register. So it's similar to the sales register, but the difference is that the sales register looks at sales based on invoices, but the item-wise sales register looks at sales based on the unique items that were sold on the sales invoice. So as I mentioned, I think we made a sale. Someone made a sale using the system. So this shows all the sales that that has been made so far on the system. So you typically have all of them on the item-wise sales. You will typically have all of them on the item-wise sales register. Okay, so with that, we'll look at that of purchases also. So we have purchase register, we have item-wise purchase register. So look at our purchase register. It's just the same with our sales register. It shows all the purchases that we've used our purchase invoice in making. And you can see everything in marketing. You can see the one that is stock. You can see the one that is temporary. You can see every single thing there. So that is our purchase register. The same thing applies to our item-wise purchase register. So there are more of reports. So as I mentioned earlier, you have tools and you have reports. You use tools in manipulating the system, use reports in just getting information on what has been entered on the system. So you also have your item-wise purchase register, which is this. So with that, we would have covered our billings. Now, where we'll be stopping for today to take questions for tomorrow is we will be looking at so we have just we'll be looking at our taxes, our budget tomorrow. We'll be looking at our accounting reports tomorrow, and we'll also have like a form of revision tomorrow. So we're going to have a lot of time to do revision. So we will take our journal entry today, and tomorrow we would look at the modes of payment. We'll look at the payment mode, the payment entry tomorrow. And before we start tomorrow, I would now ask questions on what has been taught so far. We've not done so much, you get. So I'm hoping that we'll be able to do what? Assimilate the little things that have been taught today. So we're looking at journal entry now. What's a journal entry? So journal entry are used in directly posting financial transactions into different accounting ledgers. Yes. We have the mode of payment. Now the mode of payment facilitates, I hope all of us have this slide, the movement of funds to appropriate designated bank or cash accounts to settle a financial transaction. Payment entry is used to settle payment for financial transaction. It is also very useful to settle bulk payment requirements. So we will look at only the journal entry aspect today because journal entry is quite wide. So we'll look at the basic things that concerns us about journal entry. But before I proceed, is there any questions? Does anybody have any questions? Please, the floor is open for you because tomorrow, before we do anything, I'll first bombard everybody with questions, especially those that didn't ask questions. So I know Mr. Eric and Mr. Emmanuel were the only two people that asked questions in today's class. Every other person should expect questions tomorrow. So please, any questions? Okay, so I am guessing that we are all on board and we'll be looking at the journal entry.
Good afternoon, sir.
Good afternoon.
Please, I would like to, my name is Kende.
Okay.
I would like to ask if the video will be posted in the group. Maybe we can go through it later because I was just like going up and down, like busy with some other things. So I wasn't really like 100% into the class. So there's some parts I missed out. So I want to know if the video can be made available on the group. Maybe we'll go through we can go through it in the night or in the evening later when we're more relaxed. I don't know. Okay. That will be ready for your questions tomorrow.
Okay, that's fine.
So we won't fumble.
Okay, so this session is currently being recorded, and I'll leave the floor and I'll allow Mr. Shegun to answer that question. I know it should be shared, you get, but I think the onus will lie on Mr. Shegun. So he's going to give you details on whether this is going to be shared on that platform or it's going to be shared on another platform. But this session is currently being recorded and it's being recorded for the purpose that you have just identified or mentioned.
Thank you for the question. And the session is being recorded, as been said, and we'll be sharing the link on the group for people to rewatch. Basically, all the sessions will be recorded and we all have access to them to watch so that we could use them to prepare more, understand the teachings more, and when the time comes for us to actually test our knowledge on it, we will still expect that people will go back to the sessions to watch them. So we'll be sharing the link after the class.
Okay, so thank you. So we'll be looking at the journal entry. Now, the journal entry on the system is basically very simple. Most of what an accountant does is just making debits and credit entry. Now, the basic principle for accounting is every debit entry must have a corresponding credit entry. And if you are going to use a journal entry, every debit entry that you use, you enter, the value must be the same without the current of the credit side. Okay, so that's just basically what a journal entry is. And I'm sure every accountant will know how to use this journal entry. So what you just do is you come here, you select the accounts that you want to debit, and you add a rule and you select the accounts that you want to credit. But before I go into that, I'll be running us through the initially when I click on this journal entry, we saw so many different types. You get, please don't be scared. It's actually not as it's not actually not as serious as it's not. Everything is basically very simple. So we have our journal entry. We use our journal entry normally. We have our intercompany journal entry. So this one we use it when you have multiple companies on the system. You have our bank entry. Use your bank entry to make payments. It's not necessary. You can always use this also to make a bank entry. You have a cash entry also. You can always use your journal entry to also record the cash entry. So what this tool does is it narrows down payments to. Once you click on this, it automatically wants to bring out all your banks. And this one to just bring out your cash. Credit card is credit card actually. Debit note is when you are issuing a debit note to your supplier. So it's when you are returning purchases. Then credit note is when they are giving you credit note. So someone is returning goods to you. Contra entry, excise entry is one for exports. Write-off is when you're writing off some form of debt. Opening entry, if you look at this one, depreciation is depreciation. Exchange rate revaluation, deferred revenue, and deferred entry. So this one's will not be touched now, but the basic ones that would be using for today's class is just the journal entry. But just for you to understand, you have other forms of journal entry. So I just quickly just explain them. And in subsequent classes, if the need arise, we would use the other ones. So for journal entry is simply just posting. So I'll try and make a very simple posting with the journal entry. I would not want to use, because when it comes to selling and purchases, I will want us to use, when it comes to buying and selling, I want us to use the purchase and sales invoice. So I will not replicate a transaction that I can use. I can actually use this the journal entry to make sales and to make purchases, but I will not do that deliberately because I want us to use the other tools. So I'll just use it to capture an expense and maybe another complicated transaction. So let's just assume you are moving business into your business. You are moving capital into your business. I'm moving it into bank. So I'll debit bank 100,000. I'll credit 100,000. So opening equity, let me use opening equity. So for journal entries, typically it must always have a narration. That is the bedrock of account of journal entry. So you must always add a narration. So let us say in capital use I just put spin capital introduced to the business. So what? I'll save this entry. Please always mind the date. The date is very important. So when that transaction occurred, you put the appropriate date, and you do what? You submit that document. I can always perform another journal entry. This time around, let's say we are making an expense, payment for an expense. So I'll just select the expense, marketing expenses. And so we're paying 10,000 naira. We're paying this from Access Bank. Marketing of laptops. Save this and I'll submit this. That's basically what the way journal entry works. So you most likely just be using a normal journal entry, but if you need to run a bank entry also, so you can use it. You can use a credit note, you can use other journal entries. So with that, we will be calling it a day for today, but we can't call it a day without asking questions.
Sir, please, I have a question.
Okay. I'm with you.
Can you hear me, sir? Yeah. For this journal entry,
Sorry, who's speaking, please?
Emmanuel,
Okay, Manuel. Thank you.
this journal entry,
Yes.
like, can you create like a kind of scenario? For instance, now maybe there's a particular business that requires a Royal Sync app, and they have a particular ledger they are working on that they have been using. So can you explain a scenario at which we can actually in real life apply this journal entry to their own particular ledger they've been using before, or their own particular business they've been using before? How can we do something like that?
Okay. So I'll explain. So I'll first of all say that let's have a fictitious business. We have a bar. Abi? Now the bar sells drinks, right? The bar is selling drinks. I can actually use the journal entry to make sales for drinks, but I'm not going to do that because I want you guys to use what the sales invoice. But let me take another type of transaction. So a bar, they incur so many other expenses, and they also run different types of transaction. The first one I did, if you notice, in that bar, let's say you have a bar and they've been selling for a very long time, but they notice that sales has dropped. And in order for them to do what? Increase sales, they want to do what? They want to incur some form of revenue expenditure. I'm very deliberate for saying revenue expenditure. I don't say capital expenditure because I don't want to go into the asset aspect. So they want to paint inside of the bar to make it attractive. They want to just decorate some certain things, revenue expenditure. You understand? And they don't have enough money. And they go and approach the owner of the business, and the business says, okay, sir, we need around 1 million naira to do the renovation, to paint the place and just make it look a little bit more, much more very, very attractive. You understand? So the first transaction is the owner wants to track the movement of the money that is giving the business. So the money that is giving the business is coming in form of equity, which I showed here. And you have a narration, which is paying capital introduced into the business. So he's introducing 1 million naira into the bank, into the business. So that's the first leg. You understand? Now the second leg is the revenue expenditure. You understand? Which is what the painting, the like, and the likes. So depending on the type of expense head you want to have, You get. So you can have an expense head for renovation. You understand? Or you can just make it decoration. You create it. You understand? You create the ledger on the chart of account as I explained. Now, when you create it on the chart of account as I explained, for this second type of transaction that I use marketing expense, instead of using marketing expense, in this case, I'll put renovations here. I'll put the 1 million naira here, and I'll put the access bank here. So that is a typical transaction that you can use journal entry to run. Now, that does not mean that I cannot use it to make sales and purchases, but as I said, I'm deliberately not going to show you how to do that, except if you learn it on your own. So that's that. I don't know if I answered your question.
Yes, you have, definitely.
Okay. So is there any other question that anybody would like to ask? Or should I ask questions? Let me see.
Yes, please.
Oh, someone is asking a question. Who is asking a question?
No, I said you can ask questions. Lami.
Okay, Islami. Okay. Okay, so who is Mr. Ovier? Abi Madam Ovier? Is Ovier on the call?
Just
Okay. So I'm guessing that you don't have any questions, right? And I can ask you questions.
not at all. All right.
Yeah?
I said I don't have any questions for you.
Okay, you don't have any questions.
Yeah.
So let me paint a scenario for you. You have a customer and the customer has agreed to using your software, right? And he has given you his books, you get, right? And he has a particular type of expense that he has in his previous book. And the name of the expense is, let's say he has legal, he has a lot of legal fees that he incurs, and it's not on the system. What do you do in that scenario? It's not on the ERP system. That ledger is on the ERP system. What do you do?
Okay, I felt when you import this data on on our app, it's supposed to like create the ledger for that particular legal fees and stuff.
So how do you create the ledger?
You can go to look for where it is exactly, like it's an expense. So you go to expenses. So liabilities, the correct liabilities, then go to the expenses, then you go to where you create. Just keep clicking the children or child until you get to where you can classify legal expenses, and you can now create a child for that one particular transaction.
Okay. You've tried. So you just need to just brush up. It's actually no liabilities yet. You just go to expenses and you just you go through the indirect expense and you put what you want to put there. But I like it. So any other questions before I ask somebody else another question? Who else is here? Sorry. So who is Lillian? Is Lillian on the call? Is Lillian on the call? Okay, so we will be meeting tomorrow again. The link will be shared, the classes will be recorded, and we'll be continuing from mode of payment and payment entry. So we all have the slides and we can always read ahead of the class. And at the end of tomorrow, we'll have a comprehensive recap and we'll have time to paint scenarios and run whatever you need to run. So without any other further questions for today, I will wish every person a very, very wonderful afternoon. So bye-bye. I'll be handing over to Mr. Shegun. Thank you.
Thank you so much, Mr. Topper, for the session. Thank you, because I believe we've learned a whole lot. And if it were possible to look into our notes now, it will be all filled up. Like he rightly said, we'll be sharing the material he used. I already uploaded that to the LMS. You can always go back to the LMS, log in, and under this specific course, you'll be able to see the material. Also, like I said, attendance is very, very key. And we've taken attendance for those in class today. Tomorrow again, we'll be continuing with accounting module. And hopefully we'll be able to wrap up by tomorrow. So same time tomorrow, 12 p.m., the class is going to start. The link to the class will be shared with us on the group and personally also. So please be prepared to join the class. As promised earlier on, we are going to be sharing the link to this class so that you can still use it for personal trainings and for you to know more about all that has been taught today. To wrap up, I'm still expecting us to fill our non-disclosure form and send to admin@talentandsystems.com. This is to give us confidence that all we are going to be trained here becomes an intellectual property that will not be shared across those people that are not on this training. So I don't know if anybody has any questions concerning the whole course as a whole. You can ask now before we wrap up the class.
Good afternoon.
Good afternoon.
Yes, so my name is Kende once more. I'm not an accounting student. Okay. So I'm really trying to wrap my head around everything that is being discussed today. I can so tell you at a point, it looks uninteresting to me. You understand? Like, I don't know. I'm more of a science student, so accounting. So like, I'm just trying to wrap my head around it. Maybe I'll now go and do some reading up on accounting to really get into the flow very well. So I don't know. The speaker actually did, the lecturer actually did a very good job, you understand? But I don't know if it can be made a little bit interesting for people like me that I don't have any accounting background at all. So at a point, I will tell you, my mind went off and it was coming back, off and coming back. So I don't know. I don't know what could be done to help us.
Okay, thank you so much for that. And like you rightly said, our facilitator for today has actually done a very wonderful job, and he has simplified this concept as much as possible. But this is something that is a bit new to you, and it is normal for you to have these kind of difficulties at the initial stages. But you would agree with me that subsequently, by the time you interact with these things and these concepts, it becomes more simpler. What we'll do is to share this video and you'll be able to watch at your own pace. We'll also share the material that will actually help and guide. And like you rightly said, this is a quest for new knowledge. It will require some effort from your own end to read more on this. And subsequently, we'll be having access to the system they use to explain these things to us. And you'll be able to have an hands-on experience with it subsequently. So be rest assured that you are right on track, and it is very, very normal and valid for you to feel a bit out of the class. but trust me, it's a process. And as much as you interact with the whole system, it gets more simpler and you'll be able to run through.
Thank you.
You're most welcome. Any other questions before we wrap up, please? Okay, in the absence of none, I really want to appreciate our facilitators for today, Alamin and Mr. Tokwe, for the time they've used to prepare for this class. And we'll be expecting Mr. Tokwe back tomorrow to wrap up his session on accounting module of the Oyasync ERP. Thank you once again for everyone that has joined today. Please take good time to revise all that has been taught today. And by tomorrow, come with your questions, come with your challenges, and I'm sure our facilitators are readily available to give answers to them. Thank you so much. Have a great and restful day.
I too. Thank you.